Hey everyone, welcome to thank you for coming this far. Sorry for today, I was kind of tired, but let's get started. Let's continue with our course. So here we'll be explaining about risk management, or what we call money management. How do you protect your account as a trader, right? Let me take my drawing tools. So one needs to know that when you are trading, you need to know three things, right? The first thing is you need to know your entry point, right? And also your exit point, right? Let me just write exit point. And also, so you need to know two things. First, your entry point, as I said, right? And your exit point. So exit points consist of two things. Let me break down. It's either what you call a stop loss, right? A stop loss, and or you can either get out of your position, out of what, take profit, right? Your stop loss, what we call STP. Let me write it because we are getting started with our trading, right? Entry point is just entry point. So you need to know this. And secondly, you need to know that, let's define more about these entry points, right? So let me come here. Your entry point, right, is where you place is a price, right? Your entry point, it's just a price where you say, I want to get in, right? In a position, you want to buy at a certain price, right? Entry point, right? So it's very simple that your orders can be categorized into three. It's very important. As I said, I'll always explain where it's important, what is not important, but here this part is very important. You need to listen. So our entry points are prices where you place your orders, right? And your orders are categorized into three, right? It can be what you call immediate execution. You just place to say, if it's at this price, at $2, I want to place, if that product is $1.20, you just place an order to say, I want to buy or sell at this position. I think all of us, we know. Then we have what we call limit orders, right? This is the second part, limit orders. Then lastly, the third is what we call stop orders. So I have explained the first one, right? So give me a moment, I'll explain about these two limit orders and stop orders. So immediate orders, I think I've explained. What about limit orders? So you need to pay attentively here. So let's say here it's a time, it's a price line, right? Let's say here it's $20, right? This is $50, right? Pay attention here. This is maybe $0.15, right? So your market is moving, it's moving like this. So let's say it's here, right? It's $20. So if you place your order here, whether you are buying or selling, this is what we call immediate execution. You're just executing your trade here. So what about these three? Very important to understand. Please do listen here. So if it's a limit order, right? A limit order can be categorized into what? Into two. It's either always buy. I mean, everything here, immediate order can execution can be categorized into two. Also, sorry for not mentioning buy or sell, right? These three, they can be categorized into two. Immediate can be categorized into buy or sell. Limit, buy or sell. Sorry, buy or sell. This one, stop orders, can be buy or sell, right? Because you're buying and selling, so there's nothing fancy about it. If you are buying, you're going long. I'll just refresh your mind. If you are selling, you're going short, you're shorting, right? Yes, it is like this. So let's explain about limit order. So your price is at $20, right? But you are saying maybe you saw there is a resistance here, right? You're a trader, a price action trader, you saw a resistance here, right? you saw a resistance, a good resistance here. So would you sit down on a PC to say, if this price reaches this, I want to sell? No, you can't do that, right? So you place what you call, if you place a limit sell order, I need you to understand here, this is not a limit sell order here, right? So we are saying, if this price moves here, I want to place what we call a limit sell order, right? A limit sell, be careful with this, a limit sell here, you place a limit sell. So a limit sell, if it's get filled or triggered, your position will be filled, and you're anticipating that your financial product in its price will go down, right? That's a limit order. So you set it higher, it's higher. I want you to understand, it's very important to understand, it's set higher, right? What about buy order? You are saying this financial, if it go down maybe at a price at $15 like this, right? I'll place what we call a buy, a limit buy, right? A limit buy. So if it goes down at $15, I want to buy. So which means if it's get triggered or filled, your position will anticipate that you're anticipating that the financial product, its price will go up. So we are going long. If it gets filled, we are going long. That's what we are saying, right? Very important to understand this concept. So what about this? The last one is very important. Most people get confused about this one, these stop orders. So please do pay attention here. It's very important to understand how you place your orders in the markets, right? So your stop order, right? So we are anticipating that, let's say this financial product is here, right? So I'll just project this thing. Don't get confused, I'm projecting this here. I can't write it because you'll get confused. So for a stop order, so you're anticipating that this thing will go down, right? But you see maybe you anticipate that if it's hit this liquid position, maybe it will go down, right? It's $15. You are not anticipating, please do, we are not anticipating it will go up, right? We are not thinking that it will go up, we are thinking it will go down. So do you place what you call a limit buy? No, a limit buy, you won't place what you call a limit buy. You place what you call a stop, a buy stop here, or stop buy, sorry, a stop sell, sorry. That's why I was saying most people get confused. Sometimes I get confused, right? A stop sell here, right? You place what we call a stop sell. So if you think that in the future you want to place at a lower price, to say you want to place a order at a lower price, that if it hits this $15, it should keep on going, right? If this orders get triggered, you get a ticket order from market that we are getting short, we are shorting the markets. So if you place a stop order, right, a stop order which is a stop sell, right, your order will get short, you'll be getting short. So what about the opposite? The opposite is still true, right? If the markets go up, you want to say if it reaches $15, you agree that is $15, right? $15, you want to go long, right? You are anticipating if it hits $15, the markets will go long, right? So you place what we call a stop buy. Please do understand this, a stop buy, right? If it is this at a higher price than the markets, you think that it will continuously go up, you place what we call a stop buy. A stop buy is placed higher, right? Higher. So a stop sell at a lower, you're anticipating that if it triggers this, it will go down. So most of the time what I use is let's say I see news, right, anticipating that at a certain there will be news. So usually I put what we call a stop buy here. There's a technique I will explain, but it's very important to understand. A stop buy here and a stop sell here. So if the market comes and I'm thinking maybe at this position, at this time, maybe there will be news, so there will be a what you call a momentum big move. So I don't know if it's going down or it's going up. Please pay attention here. So usually I put what you call a stop what sell here, to say if it hits this, which means there's a chance that it will go down very fast, so I'll place what we call a stop sell. So if it hits this, I'm taking an advantage to say I'm going short, I'm shorting. But if it hits there in this direction, it hits a stop buy, I'm going long, maybe taking my profit here. If it goes down, I'm taking my profit at a lower price, right? So it's very important to understand this. So I hope everyone understood this. These limit stop orders, because most people get confused. So that's why I was explaining, but as you can see, this diagram is explaining the same thing I've explained about the spread. So limit order to sell at a higher, so this is what we call sell, right? Limit order to sell, so which means this is a limit, sell limit, right? Limit order to sell at a higher price, I think I've explained, which means it's a sell limit, right? It's a sell limit. Stop order to buy at a higher price, we said it's what? Stop order to buy at a higher price, I said it's a stop, STP, a stop buy. You place a order that is written as stop buy, because you are trying to buy at a higher price than the market. So stop order to sell lower. So stop order, which means this is a stop sell. This is a stop sell. You place what we call a stop sell. So a stop sell will sell at a lower than the market. Limit order to buy lower than the market, we said it's a limit buy. I think I've explained. So stop orders are placed on an open position to get you out of the market if it moves against you. So you can place a stop order. These stop losses. So I think I've explained about entry. We are done. So we are now going to exit positions, right? So exit position, we usually focus on stop losses, right? So we are trying, what are we trying to do here? We are trying to limit our risk. So as you know that every insurance or a company, it hires people who manage risk, not who manage profit. So on our exit position, always know that we focus on stop loss, not on take profit. Because most of the time you see people focus on take profit, but we try to focus on how to protect our account per each trade. So we need to know that for stop loss, for each trade, we need to know that how much are we willing to lose, right? You can't say if it's go down, you keep on holding, you're losing. So we need to cut what we call our losses. That's why it's called stop loss, to cut your losses, to limit your losses, right? That's why they are saying stop orders are placed on an open position. With on a open position, if let's say a position that is filled, so we need to put a stop loss, whether we are getting long or we are shorting. We need to put here to say if it goes against these markets, if I was anticipating it's going down, if it goes against me, I should take my loss, right? So what are the three reasons why you should set a stop losses and limit orders to every trade, right? So it is just common sense to protect your downside. Always, you don't need to when you're doing something, you need to limit your risk, right? Everything has got a risk, right? Or you don't want to get in a position, we'll explain about economic calendars, right? To say if there is this high kind of impact, I don't want to get in a position. That's what we call risk avoidance. If you say I want to get in a position, you need to limit your risk, right? So another reason why your mindset is better, you can leave your trading screen knowing that at some degree my protection is placed, or I've protected my portfolio. That's the other reason why we use what we call stop losses and limit orders. The process helps you to sense check the trade against your trading plan. So it's very important. So let me explain a little bit here. So you can see this market, right? Let me kind of zoom so that you can see. Let me kind of zoom here. Yeah, remember, let me remove this because I need to explain how do you place an order. Let me put in 4 hour chart. 4 hour, you click here, right? So how do you place your if you want to place a stop loss and your entry points? Let's say the first I'll explain how do you go about when you're going long. So if you want to place an order, right, you come here. If you're going long, right, you want to calculate your position, you come, maybe you anticipate this thing will go up. Let's say it will go up, you come and place it like this, right? Can you see? So this is what we call the take profit side. So this sign, as you can see, I come and click here for going long, so anticipating that is going up, right? So if I think this pay is going up, we come and click here. We want to calculate what we call a position side and also our stop loss, right, to see where can we put our stop loss. That's why you see I clicked here. So if you move, you can move this, you click, you can move this as this, so you can adjust your stop loss to say if the market goes against me, I should take my loss at this position or here, whatever you want at certain price, right? This is your take profit. If where do I need to take my profit if it goes in a good in my favor? Where can I take my profit? So you can also adjust. Yeah, this is your risk reward. The more you adjust these things, these two, your risk reward is changing, right? So but we only focus at this side most of the time because we are trying to protect our portfolio, right? So to say if it goes again in this side, so that's how we put this for going long, right? So if you anticipate that it's going down, you come again here on tools, you come and click here, you come and click short. You are shorting, right? You think it's going down like this, so you come and click at this price so that you can calculate your position size. Let me delete this, very sorry. You come and click your stop loss. You can also adjust your stop loss, which means if you are going short, is up, it's kind of up, as you can see. So you can adjust this, right? It's up. This is your entry point, so your risk reward, as you can see. This is your take profit to say if it's going in my direction, to say it's going down, you can adjust your take profit according to analysis, right? So that's how you do this thing for stop loss and so forth, right? So you need to understand about these things, very important stuff. I hope everyone is understood. Let's go to our next slide.